Mum and Son on the Money podcast with Lorraine and Travus from Happy Days Accountants.
Hello, welcome to another episode of Mum and Son on the Money. Once again, joined by Lorraine and Trav from Happy Days Accounting. Hello, guys.
How are we going? Very enthusiastic there today, Chris. Have we not told you the subject yet?
No, I'm just full of innocent enthusiasm, waiting to see what we're talking about. But I'm also excited by your Happy Days MK t-shirts.
Yeah, supporting the company brand, guys. We're coming up to Love MK Day. We had these made last year, actually, to celebrate Love MK Day. So, gotta represent the brand.
But it's such a happy, colourful colour as well. You can't not be optimistic when you're wearing that.
Yeah. Oh, and we got the big smiley face on the back. That helps as well.
Oh, show us the back. I haven't seen the back of this.
Oh, gosh,
Oh, wow.
On the back there.
Okay. Yeah,
Right
no,
on brand.
I hadn't even spotted that because you came in forwards, so I haven't seen the back of you yet.
Yellow's, I just say yellow's my favourite colour, so I didn't want to be corporate branded, so I chose yellow, and because yellow's the colour of the sun, and every time the sun comes out, everybody's happy.
Just like today.
Same Happy Days, we're happy.
Yeah, it's a lovely sunny day. I feel like we're getting into the spring now in Milton Keynes. The summer is on the way. And what have you guys been up to since our last? But we had a lovely podcast last time, thanks to the guys from Harry's Rainbow for coming in.
That was really lovely. We could have
Good.
talked forever for them, but we shame we had to cut them short. But yeah, it was really lovely to have some guests with us as well. Back to us two, I'm afraid. So, but we've been really busy since the last podcast. We had to cut. We sort of not booked in or cancelled any events and everything. Avoided attending events, and then just knuckling down and work, because obviously sometimes when we get new clients, they're obviously in a bit of a pickle, and we have a lot to sort out.
Generally, we take on people that require quite a bit of involved work up front. It's what we enjoy to do.
Oh, we love it.
We've taken on a few quite time-consuming roles at the minute, so we had to take a step back and actually work a lot for once. We had to stop playing for a little bit.
But yeah, you've got to clear the decks and properly concentrate and focus. When you've got a big job like that, you've got to really kind of get in the headspace and just get it done. I think sometimes when it's quite a lot of catching up.
Yeah, but we always say that's kind of one, what our business kind of is based on, and two, just being a business owner. Sometimes you get to go play in the sun, have some fun, and other times it is just get cracking. That's not specific to us. But yeah, it was, to be fair, it was quite nice being busy, because it gives you that sense of, like, sometimes when the work is a little bit slower, you can feel like you're kind of struggling to figure out, you're trying to figure out what you're doing, and you're
motivation probably,
and doing things like this sometimes don't feel like, it doesn't feel like work for one.
Good.
But sometimes you forget the progress you make with things like this, so actually having some time to really focus on some bigger jobs for clients and get things done that need to be done, it's quite rewarding.
That's what I was going to say. It's really rewarding, because the clients are so appreciative of what we do and the insight that they get and everything. So yeah, and we like sorting out work. We've learnt recently that just doing the day-to-day repetitive work is not quite, we do it, but we like to get into teeth something and and improve things for people and make their life easier and clearer for them, and we really enjoy that, don't we? So a bit of a mum and son trait there. So
yeah, you say we've been busy with work and you cancelled everything. You still managed to get off to Morocco for 2 weeks.
Well, work and Morocco. I have to work while I'm away to a certain degree. So, but a bit of sun there kept me going. So
I hope you didn't take the laptop on work and you're working there on the beach. Did you actually have a proper break?
By the swimming pool. No, I do work while I'm away. So unfortunately, there's certain deadlines that were needed, I'm afraid. So I never truly get a break, but you do, because you're away. So we managed to get everything straight till when I went away, and then there were some management accounts and things like that I need to do, and some queries that I dealt with while I was away, but very minimal amount. And I did check out the cloudy days for doing work, so I didn't let it interfere with the sun. So
it's quite hard to work on a laptop in bright sunshine, because you can't see the screen and you get a headache, and I just find it. And then maybe the laptop falls off the sun lounger into the pool.
I feel like
there with your cocktail.
Well, I can't go down the slides with it either. That's a real issue as well. So
I'm struggling to feel sorry for you guys right now. I'm struggling to see your laptop screens in the sun of Morocco. It must be a tough life.
Well, you have to put an umbrella up and shade yourself from the sun. It's just disastrous, isn't it?
Yeah, and then you're not getting a tan then. So
I know.
Productive.
That is the purpose of going, isn't it? So,
or you get like a rectangle tan on your thighs where the laptop's been.
Right, yeah.
And you've been doing your bike riding as well, haven't you?
I have a little bit. I'm trying to. It's a bit awkward at the minute. My bike doesn't take passengers, so Lorraine's missing out. She wants me to take her to meetings on the bike, but
we've got a meeting on Friday, and I've got to take the car because he wants to take the motorbike because the weather's good. So we've got to find the middle of the road here. We've got to find a solution.
The client is also a motorcyclist, so
I've
got to play the part. So I'm gonna have to buy a second. I have to convince the wife. Get a second bike so I can take Lorraine on the back.
I've got all the gear but no idea. So I'm just waiting for him to get a bike where he can take me on it. So
you're going to have your client meetings in some kind of leather-clad bike cafe, eating greasy breakfast.
The jokes. So I've done a lot of this client's been a friend for a while. Anyway, through the bike scene, and everything I do is always like, oh yeah, we'll have our business meetings in. There's a cafe we go to up Peterborough way called Two Flags. Now we're talking like a storage container on the side of the road, but it's really busy and do really good food. So we're going to have our business meetings in there from now on. On a Sunday morning.
Yeah, sounds good. Okay, so the main thing we were going to talk about today is those dreaded 3 letters that. It's 3 letters. It's a 3 letter.
Who's going to reveal them? Who's going to reveal it? We can do one at a time.
The bearer about, okay, V.
A.
T! VAT, guys. You're going to love it, I'm sure.
Yeah, sorry about that.
So, VAT. In a nutshell, what is VAT and why is this important to small businesses?
Yeah, so for those that don't know or have a little bit of an insight, VAT is value-added tax. It's in essence a tax that the government or HMRC adds to pretty much businesses that do well or that voluntarily sign up. So then every sale they make, there's an additional 20% on top which gets paid to HMRC.
Get your turnover up to 90,000, you're a small business, it's like, 90,000. Guess what?
VAT's knocking on the door.
Yeah.
I mean, it's not as clear cut as 20% on your sales goes to HMRC. You get to reclaim all of your expenses and
the so-called reward, isn't it?
Yeah, the so-called reward.
Because whereas before you're VAT registered, everything you spend, you incur the full cost. You can't claim the VAT. So when you become VAT registered, you charge your clients VAT, but you can claim on your purchases if it's VAT registrable. Not vegetable, did I say?
Vegetable.
Vegetable.
If it's vatable.
If it's vatable, so a vegetable, that sounds quite good actually. I might just use that.
It must be quite difficult because I haven't really thought about this. If you're a company that isn't VAT registered and then you become VAT registered, to then add VAT to your prices, because it's supposed to be something that the customers don't really notice because it's part of the price. It's added to the value of what people are buying. So does that mean that you then need to reduce your prices so that when you add VAT, the price is the same, or have a conversation with, because especially if your customers aren't VAT registered? If they are, they'll be thinking, well, this makes no difference because I can just claim this back.
It's funny. I've had this conversation with a few people recently, actually, and we've had more and more people seem to get the advice online or wherever they go, where they come and the first thing they do is, I'm setting up a business, I want to be VAT registered because I want to reclaim all the VAT on my purchases. And the majority of the people, it's not a good idea. So, for us as accountants, we do, the majority of our work is B2B, business to business, and a lot of our clients are VAT registered. So when we become VAT registered, it wasn't that much of an issue.
It was an issue to
us, it was an issue to our sole traders and smaller organisations.
CICs. It was an issue to our CIC.
Anyone who's not VAT registered, really. So, when you do business to business work, it's not as detrimental because you just, hey, I'm VAT registered, and they go, cool, we'll reclaim the VAT. Makes no difference to them. The issue comes is, so I had someone come to me recently who's a small one-man band, does a bit of work, and he's been told, he's got this advice that, I can reclaim all the VAT on all these things I've bought if I go VAT registered. Now, he does the majority of work for individuals. He doesn't do work for businesses. So then he's trying to make these people like him aware that, hey, it's not as easy as that. That means that either you're making less profit because you've included the VAT in your prices, or you're 20% more expensive to them and then less competitive in the market, and then you might struggle to get the work in. It's not as, it may not work out in some situations where you're 20% more expensive, straight cut, to achieve the same profit margin, because you get to reclaim the purchase, so your purchases do become cheaper. I think most of the time we work out it's sort of maybe a 10% impact on your prices increase if you work out.
Well, we was explaining to a client recently about it. They're going VAT registered. So when they're dealing with commercial organisations, things like that, has no difference at all. But you've got your householders. It's the same everywhere. You go buy clothing, adult clothing, you could charge VAT on it.
But not children's clothes, though.
Not children's clothes, no, that's right.
Because there's a few exceptions, aren't there, of things that you don't charge VAT on. And again, you need to know this as a business. If you're selling children's clothes, or what are some of the other things?
Books, but they're not VATable. They are zero rated VATable, so they're still part of your VATable turnover. So even though there's no VAT on them, they include in the 90k threshold. What we've got: books, food, raw food, etc. But if it's made into a meal or processed in any
way. We go
way,
over and get some wings like we did from the restaurant just now. That'll have VAT on it. But when they purchase the raw chicken
or the corn,
wouldn't have VAT on it.
Yeah. And that's where there's some arguments, isn't there, in the food industry, because they're claiming no VAT, they're claiming it's a raw ingredient, and then HMRC come in and say, hang on a minute, we think you process, and then there's big debate, and some of them have been stung for large VAT bills.
Was that the big debate about pork pies or something, or whether Jaffa Cake's a biscuit or
that's it, Jaffa Cake's a biscuit.
Cakes, yeah.
It decides whether it's VAT. And of course, so if they decide it's VATable, then the prices of Jaffa Cakes go up to cover the VAT. And hence where we say with our clients with their domestic households, so they've got to try and figure out how to make this more effective. So they've got to add VAT on, but we kind of explain to them that all their purchases, they can now claim the VAT on them, whereas before, if you took the gross amount of the purchases against their price, that's their profit. So now they're adding VAT on, but they're claiming that 20% VAT, so their profit is, like you say, about that 10% margin.
So just
now.
Kind of like a lot of buzzwords there. I think just try and simplify it, and I can often be bad at simplifying this, so apologies if it doesn't turn out right, but you purchase something ordinarily for £120. Now, because you reclaim 20% VAT, it's only costing you £100, right? Because you've reclaimed the £20 from HMRC. You originally sold that for £200. If you include your 20% in that, it's not as simple as it used to cost you 120 and you made £80 profit on £200. You've now charged 100 or paid 100, charged 200, you've made £100 profit on it, right? But obviously you've got the VAT on the sales.
So the point is you're always going to be selling stuff for more than you bought it for. So the amount that you're charging VAT is always going to be more than what you're reclaiming. Absolutely.
Yeah, unless you're making a loss. There is some circumstances where you can end up having VAT reclaims. So there is certain industries, like you say, with things like children's clothes, they're still within the VAT scope of VAT. So there is occasional situations where VAT registering actually becomes beneficial, but for 99% of people it's not, right? So when you get this advice of you should go VAT registered, you should really speak to someone like us as an accountant, and we can look at your organisation independently and figure out whether it's worthwhile for you or not, because it's not all sunshine and roses. I had someone recently that wanted to go VAT registered specifically because he heard he could reclaim the VAT on a sort of £1,500 purchase he made. But then there was no benefit to him being VAT registered beyond that, other than being VAT registered. And then by the time he worked out the accountancy fees for us to do his VAT returns and what he would actually gain from it, it would end up being detrimental. Like, it'd be worse off down the line.
You're talking in terms of voluntary, registration. At 90k, you have no choice. You have to be VAT registered.
But for some people, if they're starting a business and they've spent a lot of money on things that they've been paying VAT on to set their business up, so maybe they've been buying a lot of equipment for a kitchen, or they've been buying stock or stuff, and they've suddenly thinking, I can take 20% off all this money that I spent to set my business up. I'm going to be making a loss for the first few years, because that's the nature of a lot of businesses. It can be tempting to do that, but then if a lot of your customers are not VAT registered, then it's not necessarily something that's going to be appealing to people when you're charging them that.
No, I think there's a few situations. The thing is, so with VAT as well, there's no major rush for people. So you can reclaim purchases of goods for up to 4 years and purchases of services for up to 6 months backdate. So within 2 years' time, you go, I'm going to go VAT registered, you can backdate your claims. There is the caveat to that this is another thing that a lot of people misconceive is that it's not a free pass to then claim VAT on all of the things you've spent money on over the last 4 years. For example, I mean, I used this the other day. If I make and sell these pens, right? I've purchased the raw materials for it, so that the ink and everything that goes into it 2 years ago, but it's still sitting in my stock to sell. When I come to sell it, I'll charge VAT on it. I can backdate my claim on reclaiming the VAT there. However, if I also sold this pen a year ago before being about, I couldn't reclaim the VAT on it, right? So that you can reclaim the VAT on that which goes towards a taxable sale. So it's not a free pass just to go back and claim 4 years worth of VAT.
It's not only that, if you've charged £100 2 years ago and you want to claim that in your VAT return, then you have to take that off the £100 and reducing your income to £83 or something.
It can get a bit complex sometimes.
Yeah. So I'd be careful going down that road.
Yeah, it is one of those things where a lot of people get the advice of it being a clear-cut answer of go VAT registered ahead of reaching the threshold. I think our main goal here is just, it's not always the case, right? Some people it's beneficial, but it's just we see more and more of this advice being thrown around of how great VAT registration is. I mean, we tried to, we wanted to avoid it as long as possible. Until we hit that 90k mark, we was not going VAT registered, wasn't we?
Yeah, but it happens eventually for a lot of businesses. So the pen making business has been shelved for the time being then?
For the time being, yeah. I don't think I'm making pens anytime soon.
Okay.
We'll too busy.
It's also, if you look up online to find out a conclusive answer, can I claim VAT for this? It's always a grey answer. You never get that answer to me on the government website that says, yes, you can do this. You have to make your own assumptions, things you have to try and work out, use your common sense, look at all the information and work out, am I doing the right thing? So it's quite complex.
This is why it's expensive, because you need professional help, because you can't just Google it or ask ChatGPT, because you need an accountant like you guys to actually say this is what you can and can't do.
Can I just mention, ChatGPT doesn't always get it right.
No,
we like to test ChatGPT versus what the correct answer, and often it will give you out-of-date answers.
Quite often we've had to correct it on certain things, so it's not always accurate, and they're still working on the process of ChatGPT, making sure that their information is factual, but just bear in mind to have an open mind with ChatGPT.
Yeah, and also, I think the data it was trained on was a few years ago, so you can see why it would be out of date if it's not doing the web search.
I'm pretty sure it still thinks the VAT threshold's 85,000 when we last had a look at it.
Yeah, things like that, yeah.
It's something to be careful of.
Just some of the facts there, but it's really hard to get the answers, so we need a professional to help us with that as well, don't we?
I think the thing is, as accountants, part of our training is learning the wording of the law and regulations from HMRC, and VAT is this, it's kind of an ever-evolving tax in that a lot of VAT law has come from inquisitions or court cases, or where someone has been challenged in an organisation and they've gone to court over a VAT dispute, and then the regulation has been written off the back of that dispute. So a lot of it is kind of ongoing, and
it's interpretation by the reader a lot of the time. So some of it's outright fraud, but a lot of it is interpretation, and probably interpreting it to your advantage both ways, isn't it? So and it's not a clear cut black and white.
But this is one of the reasons where we come in. Probably the biggest thing on VAT is that we work for compliance as well as saving you as much money as possible. We don't want to be like, hey, go claim VAT on all of this, because we got to stay on the right side of the law at the end of the day. And big organisations, like you say about the Jaffa Cakes issue, they can probably afford to go through all of that inquisition and the court cases and stuff. But a lot of small organisations can't, so it's probably more beneficial just to not claim the VAT on some aspects. But
I think there's also some ignorance there, and we were saying off air about how there have been instances of companies that aren't VAT registered putting VAT on their invoices to customers because they don't really understand what it is, and maybe it's one of the options that comes up in their accounting software and they just tick the box by mistake. Is it illegal to do that?
Definitely, yes. I'll just refer you to a case of 2 restaurants in Glasgow. They're in prison now for VAT fraud. So they had different businesses. Remind myself, they had several businesses that should have been registered for VAT. Their turnover was over 90,000 and they didn't register them for VAT. But then they also did not submit the correct amount of VAT on their VAT returns, and their accountant was involved in it. So they understated their VAT. So, and I think, jailed 680,000 VAT fraud. So it is illegal to do it, and they're in prison now, serving a sentence.
Yeah, it's also illegal if you're not VAT registered to put VAT. You know, for a VAT invoice, you've got to have your VAT number on it.
Yeah.
Charge the VAT. But one of the things that we often see, which is, you know, we find it fairly easy to catch when we do people's year-end accounts and when we look into it, is with Xero, as an example, because we use it a lot of people will set it up and it will have all the VAT options in there. So then people will receive a purchase invoice on the other side of the coin, see it says 20% VAT and go, 20%, there's the option, put that in, and they'll put it in with VAT on it when they're not VAT registered. Now we usually pick up on it and change it, but you know, that's, if anything, it will give you a VAT balance in your accounts, which you're not VAT registered, you're not going to be reclaiming it or anything like that, and it's understating your expenses. So actually it'll work out you end up paying more tax than you need to by.
Well, yeah, I can see why that would be done though, because if you're not familiar with the software and you don't realise that what you're clicking is the box for you charging VAT, not saying this is the VAT on the bill that I've received, then it's a mistake that I can see people making.
Oh, really easy to make, especially when, you know, if we see clients that set up their own Xeros before coming to us. The settings may not be set up the way we would set them up for them. So when they create a purchase bid or a sales invoice, it will autofill that 20% VAT as part of their account. And if they're not privy to the information that they need to be checking and what they should include on their invoices, you know, I know a lot of people that will just click through and go approve. Oh yeah, the total's right, send it off, which is, you know, it's an really easy mistake to make. It's something that people need to be aware of really when doing
it's
their
part
accounts.
of like financial software AI, isn't it? You know, it's great for the business owners to be able to do a lot of it themselves and not rely on a finance team, but at the other side they've got to have some understanding of what they're doing because of the errors that are being made. I think we heard all of that.
Sorry. I've got a really...
Just a bit under the weather and got a cough.
I've got the 100-day cough and I'm about day 14 in at the minute. So
Where did you get your
nice.
100-day cough from?
My daughter, of course, from nursery.
Oh, they bring everything back from the nursery.
They do.
I was going to ask, if you've got maybe 2 or 3 businesses and you want to claim VAT back on stuff, but you don't necessarily want to charge your customers, all of your customers, VAT, is it acceptable? Is there a way of doing it where you can have a business where you buy stuff that you can claim the VAT back on and another business where you sell stuff and you're not charging VAT? Or is that the kind of thing that would lead you to a hefty prison sentence?
That is something that is clear-cut instructions. You are VAT registered, you charge and claim VAT. You're not VAT registered, you don't claim and you don't pay.
You say that, it's quite a regular thing that people suggest to us. Oh, can I just set up a new business and split? Now, there is ways in very niche specific circumstances where it may be possible. But the way that most people put it forward is, you've got your business and you've got to £80,000 turnover. And you're going, I don't really want to be VAT registered. Split it into 2 businesses. Oh, they both now make 50k below the VAT threshold. It doesn't quite work like that because with HMRC they have group rules for VAT. If the ownership, so generally if one person owns over 50% of both businesses, they would be classed as a group and they would have to register for VAT jointly because they are technically, they're in the same industry.
Providing the same services. If they're providing different services, then that's a different concept altogether. But if they're providing the same services, then it's deemed as VAT fraud, basically. So
I guess it depends what counts as services, as the same services. So if you've got a car and van hire business that's suddenly reaching 90k and you say, right, let's have car hire business and a van hire business as separate businesses and split it in half,
they would still fall within group, I would say. I mean, it's one of those things. We had a CPD session on it fairly recently, but a lot of the HMRC guidance also comes under the ownership of the organisations. So if it's under the same control, they would have to be very, very clear-cut, separate organisations to the point they would never be combined in the first place. So if they're already in a business together, the chances are you couldn't split them. Again, there's some very rare circumstances where it might happen, but
Well, like in EastEnders when Ian Beale has his chippy and then there's a taxi company operating out of the room at the side and he owns both, but he runs them as separate businesses, and maybe they might have been the same business to start with, but then Ian's thinking, actually, I don't really want to pay VAT on my fish and chips, so I'll just kind of chop these in half. There's ways maybe?
It depends how it's done and how it's developed. So if it was set up in the initial two different businesses, that's fine, because obviously when they reach the threshold, fine. But if you've already got to that level, the problem is evidence. So if HMRC come and investigate you, so I've got a bit of and then they see that, they're going to be looking, this is suspicious, you've tried VAT fraud, so we're going to charge you VAT. And then it's your lookout, you're going to have a VAT bill once they start investigating. But if it's clearly defined, then that's fine. And it's all about keeping your records accurate, keeping an audit trail of everything. I refer back to a few years ago, many years ago actually, probably about 15, 20 years ago. I had an VAT inspection. Well, you're regular, you do your VAT returns, and randomly they pick you up for a VAT inspection to come and see you. And so I wanted to get to the football game in Southend that evening.
And you had a nasty VAT infection.
I said I can't come. Exactly, I had a VAT infection. Exactly.
You can get a cream for that, I think.
Well, actually, the inspection started in the morning and it was finished by about 11 o'clock. Because the records were so in order and clear, they left me and I made a message, get me on the bus, I'm coming to the football game, whereas normally an inspection would take all day long, but if your records weren't in order, then they start probing and digging and seeing what else they can find, and that can lead all sorts of places. So, if you split businesses some way, whatever you do, just make sure you've got clear reasons for doing it, evidence, and that it's not showing VAT fraud on it.
There's a few areas that they'll look into. One is the ownership they can question. They can question the separation, whether they are two separate organisations in their own right. That can go down even into shared services. So if they rent the same premises, do they work out of the same area? Do they use the same stock room? To
so there's
extent,
no pulling the wool over their eyes. They're going to find out exactly what's going on.
Exactly.
And I think the slightly scary thing about VAT is that it's a random inspection. They don't have to suspect anything. They just pick you at random and they'll give you a VAT inspection. And this could and how, what is the likelihood of getting one of those? What is the percentage chance? How many
50-50,
businesses?
you either do or you don't.
Well, I had a business years ago, so in the 90s, and I had a VAT inspection then. And then the last VAT inspection I've had, one of my clients had one about 3 years ago. And then I had one 20 years ago. But often what they do in their VAT inspections, they're looking at other companies as well. So if there's something suspect going on, they will then dig into all the other companies, checking all their VAT codes and everything. And so if you're not doing anything wrong, it's pretty much straightforward. And then you might get a VAT inspection linked from any other dodgy people that you've got there. So it's luck of the draw, isn't it?
So if you have dodgy customers, that puts you at risk.
Potentially, yes, because if they get into an investigation with them and you're linked, they'll be checking you out. They'll be checking everybody else connected with it to work out the whole situation. So a bit like the lottery, really,
The lottery you don't want to win.
Yeah, it's a lottery that you want to lose, basically. Yeah.
But saying that, I had the VAT inspection. I had a really good relationship with the VAT inspector, because everything was in order, and everything was clear. A couple of hours, he was totally happy. And then I was in an organisation where we always claimed a refund. And then, so in next quarter, when suddenly the refund was really high, he'd give me a call and I'd say, that's the reason why. Fine, passed it off. So, it's not scary. If you're doing the right thing and you're keeping everything in order, they're not scary, they're not frightening.
One of the key takeaways is just, one, if you haven't had advice on VAT, you haven't spoken to an accountant or anything like that, and you've found this super easy way to avoid paying VAT all entirely, you might not be completely compliant. It's one of those areas which you should really speak to a professional on, because it's so easy to get caught out, and when they do come down with a hammer, they will come down on you. And if you don't have your records in order, Just something as simple as not being able to keep all of your receipts in order, right? So if they ask to see a receipt for a certain purchase and you're not able to provide it, that could cause issues. And like I say, if they start finding issues, they'll dig deeper and deeper and deeper. So it's one of those things, if you're unsure about it, just speak to an accountant, because it's one of those areas which can really come back to bite you.
Yeah. This doesn't sound like the sort of thing where you should just wing it.
No, definitely not. It's too serious to wing it. I don't want to frighten you, but if you're not doing anything wrong, it's nothing to worry about.
You say that though, but even though I feel like I'm not doing anything wrong, you're making me think, am I sure that something hasn't gone wrong somewhere along the line? Because I'm not 100% sure that I'm perfect at doing my accounts, and I might have made a mistake, and this is the kind of thing that they pick up on. And ignorance is not a defence, is it?
No, it's not. But also mistakes, what they'll do, they'll just charge you the VAT on any mistakes you make.
And potentially interest as well.
And interest on top of it, so, but, some of the smaller receipts, sometimes you haven't got receipts. Certain things, smaller amounts, they're looking for more serious,
they're more
large
looking
items.
For you've blatantly created,
Yeah,
or you've willingly commit tax fraud. If you've accidentally put VAT on a £5 purchase you made 2 years ago that was non-vatable, they might give you a bit of a slap on the wrist and be like, whoopsie, pay your VAT plus the interest on it.
But they're human beings. They can tell when it's a genuine mistake and when you're actually trying to commit fraud.
They're generally pretty hard on it. They'll still make you pay and pay the interest and stuff, but little things that they're not worried about. If you've made a £20,000 whoopsie, maybe a slightly different story. But I think, but it's one of those things that we see with accountancy software, and we've touched on this before in previous podcasts. It makes these things look so easy, where you can just click submit, off it goes, VAT return done. The value that we bring a lot of the time isn't the submission anymore. It is the validation,
the reviewing,
the reviewing,
checking everything's correct. So with our clients, we do it on a regular basis. Some of them we do it on a monthly basis. Check all their VAT allocation. When you've got a team working in a company, we'll check that everything's been allocated correctly. And there's some VAT items like entertaining and hospitality, you can't claim the VAT on it, even though you're VAT registered. So they have to go through at the gross amount. So we pick up on things like that to make sure that they allocate that zero rated VAT. So, and don't be scared. It's like anything, if you're going to try and do something wrong and try and dodge things, then have your back, look after your back. But if you're not, don't worry, mistakes, it's not the end of the world. So don't be frightened of your mistakes.
Still worry enough to do it, try and do it correctly, but
Yes,
don't panic yourself that you're going to end up down this big VAT hole that you need a major court case and lawyer fees to get out of. That's very unlikely to happen, if at all.
Do you know what I worry about more than that is when the VAT bill comes not having the money to pay it because it gets spent. So, is there an easy way around that?
Well, we always say to everybody, and we do the same, that VAT is not yours. You're just holding it for HMRC. You're passing it on. So if you did a bill before you were VAT registered for £100, that is your money. But you're now VAT registered, so that extra £20 is not your money. So what we do, and we recommend all our clients, they have a second account. Well, we have three accounts, don't we? One for VAT and one for tax. So on a regular basis, we'll check the VAT return and we'll transfer the money out of your cash flow, because it's not cash flow. Remember, it's not cash. It's just a liability. And so we put all our VAT into a VAT account to get interest, and then all our tax, we work out our tax and put it into a tax account and pay it when we have to.
That nice chunk of interest obviously is income to you as well. Yeah. That's not going to the...
Well, that's the bonus, isn't it? That you're actually earning interest on that money that you've squirreled away ready for the VAT man, and then...
It's such good discipline to do that from the start. Don't get into the misconception that it's your money, because...
That's when people get in trouble. But with softwares these days, it's so easy to check your VAT balance as well. If you do your bank reconciliations and you get everything up to date, even if it's not 100% complete, 100% accurate, at least to checking that VAT return, just get an idea of where you're at. You can go, right, I'll put £2,000 away for my VAT bill. Great. In a month's time, if it bumps up to £3,000, you've only got the £1,000 fine rather than £3,000, right? It's just checking in and making a conscious effort to put the money there for it, really.
Every client is something we say to them, set up a second savings account and put the money in there. And it's so important. It's not your money, write it off. It wasn't your money before you were VAT registered because you didn't have it. So now you've got it, don't use it for payment.
Another way to potentially help with the payment as well, which a lot of people may not know, there's technically two different VAT schemes. Well, there's more than two, but two main ones when you register for most companies. You've got the accrual scheme and the cash scheme. Now, accrual means that you are due to pay the tax on the next return after you've created an invoice, for example. So if I've invoiced you today for £100 with £20 VAT on it, in my next tax return, as soon as I raise that invoice, it goes into that VAT return. And I have to pay it. You may not pay me for 6 months. I don't know. Say you're a bad payer and you haven't paid me for a while. So I've got to pay that VAT before you've even paid me.
Yeah, that doesn't sound good.
It's not. But that's what most people and most accountancies' systems will default to in the first place. There's also the cash base. So if you, I think at the minute, I want to say the thresholds are upping. So I double check this before taking this as gospel. I think it's up to £1.35 million turnover. Or there's a value on assets as well. But if you're below that, you can use the cash scheme, which then I can raise that invoice to you today, but I'm not going to be liable to pay the tax until you've paid me.
See, I think that's what I do, because my other business is doing discos, and people book the disco a year or two ahead because it's for a wedding, and I'm not going to see that money for years. So I really don't want to be paying. Well, I'm not VAT registered, but if I was, wouldn't want to be paying VAT on that money until the point that the money was in the bank.
So making sure, obviously this isn't something that you've got to go to HMRC and request or change. You can make the change yourself, and like in Xero, for example, under your financial settings, you can just select cash when you set it up and do that. What I will say is, if you are on accrual at the minute and you want to change to cash, just be careful, because when you change that option in Xero, if you've already done VAT returns, it's not a clear cut. You've got to run some calculations to make sure your next VAT return is correct. So I don't want to give that as a free pass to people to go change that setting and just go forward.
But it is something that you can change further down the line if you need to.
Absolutely, yeah. You just change how you calculate it. It's up to you how you do it. And then obviously if you reach that threshold, then you'd have to switch back to accrual anyway.
But it helps your cash flow a lot, being cash counting. Helps it a lot.
Now, what if you're VAT registered and you've done that voluntarily, and you've now listened to this podcast, and suddenly you've had a sleepless night thinking, I wish you're having regrets. You're having the FOMO of VAT, faux VAT. Is there a way of unregistering for VAT?
Yes, it's a straightforward process. As long as your turnover is below the thresholds required, you can deregister quite straightforward online.
Just to clarify, it's 88,000 at the minute. So if your turnover is 89,000, unfortunately, you're not there to. You don't have to register if you were not registered. But if you are registered, you wouldn't be able to deregister unless you're below 88,000. But yeah, as long as you're below, you just let HMRC know that you don't want to do that registered anymore.
And complete a final return. Decide when your final return is and complete that and deregister for VAT. Straightforward. And then stop charging.
Is there
VAT.
a limit to how many times you can register and deregister yourself?
Oh, that's a question.
Because you could register for VAT anytime you've got a big purchase, and then deregister again for a few months, and then when you need to spend a bit more money, register for 3 months. And
I'm not sure you can do it in like a monthly basis, because it's all about the 12-month rolling period and the threshold. But yeah, there's not a sort of a limit. You find in another year's time that you need to be VAT registered, or you don't need to be VAT registered. I don't think there's a limit that I've even seen anywhere, actually.
But if you're trying to do something like you just mentioned, then that would be tax fraud.
Then you'll look like you're raising that red flag with HMRC. So good luck to you on that one.
Yeah, that might ring a few alarm bells.
There's these like sort of when you process your returns, because obviously it's making tax digital, same as sole traders now. And I remember before, so when a return went in, they're expecting a certain amount with your returns. And then when there's a sudden change, there's red flags that raises alerts, and the same with everything else there. So you're just like, come and get me. Put your flag up and come and get me. So,
yeah, there's loads of complexities in that, though. I think that's what we're trying to touch on. I mean, one of the ones, just again before we start closing out the podcast, one of the things I wanted to mention, that again, another thing that has come to me a few times recently, is other countries may have a VAT rate. So I think it was Spain recently has a 10% VAT rate. So one of our clients ordered something from Spain, it come through with 10% VAT, and obviously their accountancy software didn't have a 10% VAT rate because we don't have that in the UK. They went through, manually created a 10% VAT rate and put it through because, it said VAT on it at 10%, so I'm going to reclaim that. That's not the same as British VAT. So that's another level there.
Right. Okay.
You're not, that is VAT that's been paid to a Spanish government. I mean, the British government doesn't want to turn around and go, oh, here's the money back that you paid that other government in another country. They're different VAT
VAT we're out of the EU now, so if you wanted to claim VAT from the EU, you have to set up a company within the EU to be able to claim their VAT. So as far as our VAT's concerned, in UK, if you bought something outside of the UK, it's 0 rated VAT.
So could you used to do that when we were still in the EU? Claim back
yes,
VAT on
all the
international?
EU was general, you had your VAT number, but you could claim it through the EU.
There is a way that you can, if you did, let's say, that order, you can contact the supplier, give them your VAT number and explain the situation, and they can take the VAT off. So it will be non-VATable. There'll be no VAT on it, but the majority of people, when you order from Spain, it might be from a quite big corporation, and good luck getting them to alter their invoices, basically. But
you can give me a VAT number and put it at 0 rated. So generally outside of the UK and outside of UK and Northern Ireland, basically. Well, they're UK, aren't they? So
Okay.
So
what is the flat rate scheme? This is something I've heard about. Is this something we should be considering for small businesses?
So they charge their VAT as normal, but instead of reclaiming the flat on their cost of, they pay a fixed rate, don't they, on their gross income, and then so it's for sort of low expense businesses. So they just pay a fixed rate. It's nothing I wouldn't really go into.
We've never actually come across recommend it to anyone at the minute. It never really worked with
it's
people
just a set rate for the year, and then I think it's amended at the year end. And
so do you, if you were doing that, would you put VAT on your invoices, or you wouldn't put VAT on the invoices?
Yeah, because you'd have to register for the flat rate scheme, so you have to apply for the flat rate scheme as well. Whereas we spoke about cash accounting and accrual accounting, you register for VAT, but you choose which scheme you're using. Flat rate scheme, you have to apply for it and qualify for it. So it's not very rarely used there. So
the one that is more often used though is marginal VAT, which might be a useful thing to talk about, because a lot of people these days are getting into side hustles that are growing and growing and growing, and one that any let's say for example you buy and resell used goods. Used cars is an example I've seen quite a lot of recently, where people are buying and selling motor vehicles. You can use, or get into the marginal rate scheme, marginal VAT scheme rather, which in essence means you only pay VAT on the profit you make on an item, as opposed to the full amount. So ordinarily you'd buy, if this scheme wasn't there, you'd buy a vehicle for £10,000 and sell it for 15,000. You bought the car second hand, so there'd be no VAT to reclaim. But without this scheme, you'd have to pay 20% VAT on the full £15,000 sale price. This stops that, where in essence you've bought the car for £10,000. You've sold it for 15. You take the difference at £5,000. That is what your VAT is worked out.
And it's at 16.67% rate of the profit. So if you're antiques, vintage cars, anything second hand, and you're VAT registered, so you can claim on all your standard rate things, but on your items that are marginal VAT, you calculate the profit and you pay 16.67% of that profit.
Yeah. So it's actually quite useful for organisations like that, because it means the VAT. This is one of those areas where VAT registration may become beneficial, for example. But yeah, it's a little bit complex in that you've got to make sure you're accounting for it correctly and making sure it's all backed up with documentation. But yeah, it's a really useful scheme for people who buy and sell used things. Obviously, if there's VAT on the thing you've purchased initially, it wouldn't come under the scheme.
Standard rated. Then when you sell it, it's standard rated.
But obviously, again, we're talking second-hand goods here. I bought a car from old Joe down the street. You can do that. So,
the other scheme basically.
Very interesting. And is it the same rules for charities?
Absolutely not.
Absolutely not. That is a minefield for another day, isn't it? Absolute complex road of VAT, isn't it, with charities? So it's not straightforward at all. There's partial exemption, there's exemptions, and depending on the charity as to what they can claim, because a lot of them, where you've got overheads, but what you're selling is not VATable. So if you've got a gallery and it's free entry, you've got a charity, a hospice, you're giving care to there, so there's no VATable charge on there, but you're paying out for expenses. So, and what there's a scheme, and there's different ways of working it out, but HMRC allow you to claim a percentage of your overheads, which is called partial exemption. But that is where you come to an agreement on what your rate is on your overheads. But I'm not going to go there. I'm stopping there because it is so complex.
I think it's interesting from a perspective of a business that isn't a charity, because I had a charity once say to me, oh, you're not meant to put VAT on our invoices, you're not meant to charge us VAT. But I think you still do, don't you?
Marketing, advertising and marketing, you can put 0 rated VAT. So that's another 0 rated VAT item. So where you're a charity, if you're the charity and you're doing some advertising, you can ask them not to put VAT on it, and that's absolutely correct. Yes.
Okay, so I was okay to not charge them VAT, but
yes.
I don't know. It makes you feel a bit uncomfortable doing that if you're not sure that they're right when they're telling you that.
Yeah, only on marketing. Is what can be 0 rated VAT for a charity.
This is another minefield that we actually had in our notes to touch on, but we never did. And that's different VAT rates, different nuances. So you've got your standard rate of 20%. You've got things to do with sometimes new build properties will be different VAT rates. You've got, when you get to construction industry, you've got things like reverse domestic charge.
Yeah.
There's so many different varieties of VAT and when not to apply them that I mean, realistically, this is where you need an expert to help you out with.
Beyond the scope of a mere podcast.
I think so, yeah.
Just one fact I'd like, because a lot of people do this mistake, is if you are registered for VAT, do not put anything to no VAT, because although it's...
Well, this is a zero specific thing.
Yeah, I don't know if other softwares do it. It's 0 rated, so you choose the 0 rated VAT. No VAT means it won't be included on the VAT return. So no VAT in terms is only used for donations, grants, trust and foundations for charities, because they're not included in the VAT return. So if you're buying lots of bits and pieces that are 0 rated VAT and putting no VAT, they're not included on your VAT return. So you do not put no VAT, particularly in charity.
If you're VAT registered on 0 specifically, again, that's what we mostly work with. Yeah, no VAT excludes it entirely from your VAT return. So if you are VAT registered but you buy a lot of things from, say, sole traders, little organisations that aren't VAT registered, and all of your expenses to that, and you put no VAT on it, let's say you've spent £10,000, none of that will be on your VAT return, but you'll have all of your sales on it. So when you report it to HMRC, they'll go, oh wow, they've made £30,000 but they've not spent a penny, right? So this is where we're 0 rated, obviously it's a 0 rated tax, VAT, but it gets included on your VAT return, so it will show in your boxes.
Some other software show it as outside, it's a T9 code outside the scope of VAT. So just understand, if it's 0 rated, the only thing that's outside the scope of VAT is grants, donations and trust and foundations, and that's all.
Yeah, I think that is an easy thing to get wrong. And I guess when you're doing someone's accounts, you can search and see if there's any things that have had the no VAT code put on them.
We have our ways, yes.
Well, we do, and that's what we do a lot of check. When we do VAT returns for clients, that's what we'll be looking at, checking things and things like that, make sure they've got everything allocated correctly before they submit the return, because there is a legal statement on there. I confirm.
I declare that everything is true and accurate. And
yeah. So just be careful ticking that box. Make sure you do understand everything's correctly VAT.
I feel bad. I feel like the only thing we've done in this podcast is scaremonger people on VAT and be like, get an accountant.
Yeah, you're really not selling VAT to companies that aren't.
That's kind of the idea. It's not all sunshine and roses.
Was you buying it before we started the podcast?
Well, yeah, I thought it was a brilliant thing. All this extra money, but it's a double-ended sword, isn't it?
Well, yeah.
Yes.
And then if you're not comfortable doing it, don't forget you've got fees for an accountant to do your tax returns or to review them if you want to be extra safe and do that. So suddenly, if there is a benefit financially to reclaiming the VAT for you, it can get eaten up pretty quickly if it's only small.
So we've got one more thing on my list to talk about. Southend Endgame. That sounds like a football match. Is this a case study?
Oh, that's when I said I had the VAT inspection. I didn't think I'd get to... The MK Dons were playing at Southend in the evening. And I said, I can't come. I've got VAT inspection.
You did talk about that.
Because my work's so good and organised and clear. he let me go by about 11:30, and I rang him up and said, "Get me on that coach to Southend."
And
So
then there you were.
I was,
off
yeah.
to Southend.
Yeah. So
Brilliant. Well, thank you so much for going through all of the nuances of
you're
VAT.
very welcome. I bet you loved it, didn't you?
It's just been the best way for me to spend an afternoon discussing this. But obviously, if this has kind of given you a little bit of a cold sweat, then talk to these guys. They can give you some personal tips and advice, and just basically
Talk
take
to
care of
your
everything for you.
accountant, and if your accountant doesn't talk to you in a way you understand, then find somebody
Bin 'em
that
off.
does.
Yeah.
I feel like we got a little bit lost in this podcast as well, because it's such a minefield with VAT, and it's so different business to business. So this is why it's really hard to give that advice to the masses in general. I
think it's just about understanding it, because I think even if you've got a really good accountant, it'll be so much easier if you actually understand it and you don't have to spend hours getting it explained to you over and over again. But I know personally I need to have it explained every time I do a VAT return, that some of these things I just can never retain the detail of how you do it. But
It's not an exciting thing to retain, is it? Nobody really likes it, do they? But we have to do it, don't we?
Part of the life of business.
it is what it is.
yeah.
So you're doing your Rocket 5K next month?
Yeah, we're continuing the running.
Yes, we are, aren't we? Although Travis did try for a half marathon. He's
wouldn't
still
have it.
trying for a half marathon. I haven't agreed to that. I didn't agree to the 10k, and I haven't agreed to the
You
half
need your
marathon.
sign off as an employee. It's like, is he allowed? No. He says no.
I know, this is convincing Lorraine to do a half marathon. This is not me.
Oh,
Me.
okay.
Yeah, I
Right.
didn't agree to the last 10k, and he's talking about me doing a half marathon, and I'm just like, I haven't agreed to it yet.
Oh, it's only just a bit more than 10k, isn't
That's
it?
what
he
Just
said.
a little
It's
bit
double,
around,
isn't
just
it?
like running home after.
Yeah, she's just got to go back around the loop she done. That's it.
Yeah. So you've done it once, you know you can do
exactly.
it. Just
Exactly.
keep going.
I've compromised with the Rocket 5k. I think I could do that, and I made sure it was on a flat surface.
Rocket 5k's downhill though, isn't it?
It is.
Yeah.
So
I'm not stupid, am I? the first bit from Weatherspoons up Midsummer Place is uphill, and I can cope with that at the beginning, and then it's just rocket downhill to
downhill to
the
the stadium.
Stadium MK, the old MK Dons, where I'm quite regularly there. So will I be there the day before? No, I won't. Our last home game's this Saturday, isn't it? Gosh, scary. I won't go to that. But yeah, so I did. When he looked at the half marathons, and because the 10k we did, the last 2.5k was uphill, and it killed me, and I hadn't done any uphill training. So when he's been looking at 30, I've been looking at the routes, seeing where the uphills are. So when he suggested the Rocket 5k, and I looked and saw it's downhill, but okay, I can give that a bash. So
And I told her there was a medal at the end of it, and she likes her medals.
Yeah. Need a bit of shiny bling at the end.
actually, let's just correct that. Trav wanted to do it because of the medals, because it's the MK Marathon weekend. He wanted to go into one of the races, and the others were fully booked. The only one free was the Rocket 5k, because he wants one of the Star Wars medals.
Yeah, it's on May the 4th.
That's why we're doing it.
So
Medal.
they're all
no.
Star Wars based medals. They look quite cool. So yeah, actually, I do want one of the medals.
They did it one year. They did it so that the 3 medals for the different events at the MK Marathon all stuck together, and you got like a mega medal if you
Oh, that would be
completed
cool.
all of them.
Oh wow, that
Yeah.
sounds really cool.
They do the MK Challenge medal as well, which is competing in one race on each day.
Yeah, I think that's what it was.
Yeah, that is quite cool. We wanted to do the marathon relay, so you get a team of 4 of you, and you each do about 10k of the marathon. That sounds quite fun, but that was fully booked.
They're all fully booked, so we left that a bit late. So
Book early next year.
Yeah, that's it. For the half, for the half marathon.
So, yeah, not keen on that then.
No. But one more thing to say, we're going to be celebrating Lorraine's birthday on Wednesday as well.
Yeah.
we're going to go out. We're going to do golf.
I don't think I'd be on the next podcast if I said how old she was going to be. So I think
No, we celebrated a big one last year on a quad bike, and I survived because I crashed because I
Nearly.
forgot how to brake going downhill. I did this downhill tricky bit. We'd been riding about half an hour, and we decided to do this other tricky bit going downhill, and I was fine first time, but the second time I just went down and forgot to brake.
the instructor
It's like-
said 30 seconds before she went, just be careful down here, because if you don't brake, you'll just keep going. And she did. The bike tumbled, she went tumbling, the bike went flying. I was at the top watching my mum get absolutely flung off a bike, and I was terrified.
Yeah, that sounds really scary.
It was good fun though. It was really good fun. Just outside of Milton Keynes, but I did quad biking on holiday last week in the Sahara Desert. That was amazing.
Wow.
So you can't get into trouble there, but this was a tight, narrow course, wasn't it?
With
but the
horses in the
Sahara
middle.
Desert, I was like, you can just bomb
You can
around
imagine
doing
it's quite
donuts.
soft, the Sahara Desert. If you fall off, there's a lot of sand there.
It's much better than Egypt's desert, the Sinai Desert, because it's all gritty and sandy, whereas the Sahara is just full of sand and that. So I was kind of bombing around and go down to the beach where it's slightly wet, doing donuts on that. So anyway, so this year we opted away from quad biking. So probably going to go golf.
Yeah, I
So-
think golf sounds a bit safer
Yeah, we
than your
haven't-
tour of the deserts of the world.
Yeah. So let's see
We don't
how
do
the day
safe,
goes.
do we, very often?
No, we don't. No. Bit of adrenaline. Well, he does motorbiking, he does
Yeah.
rock climbing, he does mountain biking, and I have to do these things along with it.
Have to. I don't know. You beg to come along a lot of the time.
Brilliant. Okay, well, thank you very much for your time today. Thanks for all of the insights, and good luck with the 5K. And we will see you next month.
Yeah. We'll
Thank
see
you.
you all soon. Thank you
Bye.
very much.